Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Macro Monday. Let's take a look at some legacy TradFi charts. But first, the flows report from James at CoinShares. Ethereum outflows for the third week, as he mentions here. And it's going to be interesting to see when we get the ETF approvals. Should be this week or next week for our ETH. When those launch, will the announcement move price higher? Will the launch move price lower with the listings? How will that affect ETH? How will that affect BTC? Will it not matter if we're bullish? Will it delay bullishness further? These are all things to think about. And I would definitely, I keep saying this, really just reminding myself, keep the leverage down or off and keep size down until better trades emerge. Weekly flow is basically flat. Last week, just barely negative. A lot of that coming out of ETH. Also coming out of short Bitcoin, which is interesting. Some flows into multi-asset products, probably related to the idea that if we are going to see more ETF applications and launches, eventually we will see the multi-asset products, especially in the US, stuff like GDLC or BitW, things that have a massive discount still. Those discounts may start to close, so maybe there's some early movers into those products with that assumption, but that trade probably isn't happening anytime soon. And depending on your political views or assumptions on who wins the election in November here in the US, that probably also affects the GDLC and BitW discounts, assuming a Trump win means more ETFs because of looser regulations. Looking at the bold reports, 30-day cumulative flows, we've come all the way back down here. This was the big infusion of the basis trade, and now we're more flat than we were during the basis trade infusion. So this is very different so far as the flows are concerned relative to what we saw in 2020 into 2021. And a lot of that was GBTC. Bitcoin here on the day doing well. It bounced higher. This was certainly a bear flag. Welcome to inside of the cloud, right? We can go up, we can go down, we can go sideways. There's really no definitive high time frame trend here. We're ranging in a range at this point. The 20-week moving average is all the way up here at like 65-ish, 64.5, somewhere like that. Ultimately, back above the cloud is where I feel most comfortable being back on the long side. And I really hope we're not just treading water as somebody turns on the sells again now that we're back down to 63.1. So hopefully this wasn't just a relief rally. Before I go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. Pulling up ETH specifically on Kraken Pro, we may have another case of a falling wedge on our hands. Certainly the duration is shorter than the last falling wedge, which was multiple months. This one about a month. But any day now, we should have the ETF approval announcements or more news that we're closer to approvals, something to that effect. So I could see a fundamental reason for this to move up, as well as a technical reason for this to move up. It's still above the daily cloud, unlike BTC, which is in the cloud. And if we just use the fibs here and we are conservative with our measurements, 4,300 to 45 would be the estimate. The last falling wedge targets also still probably in play. We didn't actually reach 5K, obviously, but that would be the extension of the extension if we move higher. And this may be a case of, we move up here somewhere in the fives and then ETH unlock and we go all the way back down. Something like that. I wouldn't rule that out. It might sound crazy, but until we know how much ETH is unlocking and we see it unlocking and we see the inflows or lack thereof, I would be very careful making any assumptions on ETH price, just assuming the ETF is bullish. Looking at volumes today, Tether, sadly, at the top on Kraken, BTC, Sol, ETH below Sol, with the 5th highest coin on the list. That just goes to show you what type of market this is. Nobody cares about your page 2 altcoin. Okay, they just don't. Most of the volume right now is in memes still, and BTC, ETH, and SOL. As far as the legacy calendar this week, we get J bright and early tomorrow at 9:30. Jolt's a big deal. More Fed speak Wednesday. ADP employment numbers, decently big deal. ISM, FOMC meeting minutes on Wednesday, Thursday holiday. More Fed speak, but ultimately the most important thing this week is going to be the unemployment rate. If it comes in at 4.2%, I assume markets start to price in a cut sooner rather than later. I don't know if that moves the cut up to this month, as in the end of the month. It's just a wait and see based on the number. I'm going to assume the number isn't going down. I think the base case is probably we just see the estimate 4% again. I don't think the market reacts off that one way or the other. And then next week, of course, is CPI. So the two-punch combo of unemployment and CPI before the FOMC at the end of the month, depending on what these come in at, we may see Fed probabilities for a cut shift increasingly towards a cut in December. Now, something I've heard nobody talk about so far is the Fed now has plenty of room, in my opinion, to cut, not because of the numbers, but there was this fear that the Fed cutting on an election year was going to be political. Because of Biden's poor debate performance, I don't think that's necessarily the case anymore. I don't think the Fed cutting is going to matter, if you know what I mean. If they keep Biden in, I don't think people are going to say, well, Jay Powell was the reason Biden won, assuming he would win, which I don't think he will. So what I'm really saying is, look, the Fed's got more wiggle room than they ever thought they would based on how badly Biden is polling. So I don't think a 25 basis point cut is going to be enough or matter for Biden in the election. All the more reason that we probably see a cut sooner rather than later. And oh, by the way, Truflation with a one handle, a 1.85, the lowest we've seen in quite some time, maybe since the inception of Truflation. Truflation came about a couple of years ago now, but this is quite a low reading. This isn't CPI, this isn't PCE, but we're definitely headed in the right direction based on the real-time estimates. Looking at the June estimate for CPI 3.12, we are a day into July and it's coming in at 3.23. This is probably energy popping this up if I had to guess. PCE also creeping down. So all these numbers continue to head in the right direction, and the question is just what does the Fed really want to see? Do they want to see us all the way back to 2 before they cut at all? Or do they want to start cutting slowly but a little bit? You know, one cut this year, I don't think is going to matter, but it's certainly going to be a signal to the market that says hikes are probably off the table. As inflation drops, real rates rise, and that also puts pressure on risk assets. We also have GDP estimates falling below 2%. We have an update on this on Wednesday as well. So this is something else to watch this week. If, for example, GDP plummets, right, how does the market digest that? Is that bullish because that could indicate a cut sooner rather than later? Or is it bearish because that means the economy is weakening and we're cutting from a place of weakness instead of a place of strength? Or is this representative of stagflation, something like that? So plenty of little data points this week that may have a bigger, broader impact on the Fed's direction in the near term. Looking at the yield curve today, the front end of the curve is up a little bit. The back end of the curve is up a lot. So this is a bear steepener. I'll put an article on what that means and what the impact will be and what to watch for. And this could be the market pricing and inflation expectations of the next president, policies of the next president. It could be the market moving out of risk off into risk on. But higher yields eventually mean risk assets will take a hit because they reach a point where they are overbought enough where people start to take some off the table. Look at the 10-2 yield curve inversion. We're still inverted there, perking up a little bit, but still very much inverted. Unemployment there at the bottom. The number to watch for this week, and rate decision won't come until the end of the month. Historically, we get runaway unemployment, we get rates down, we get yield curve uninverted, all sort of around the same time-ish, and that is a recessionary picture. So we're not quite there yet. So it's going to be interesting if we get all of that and we still don't get the recession. We still get risk assets roofing. We'll see what happens, but the time to panic for a recession certainly isn't until unemployment continues to perk up and the yield curve starts to uninvert. We've also been seeing a pretty tight correlation with the 10-year yield and oil. Not exactly sure why. Perhaps that's baked in inflation expectations. Oil in the white kind of leading the 10-year on the way up and on the way down. 10-year up big today. Oil also up big today. So if inflation runs hot or is expected to run hot, investors are probably saying, you know what, I don't want long-term yields. It's just not worth it. So that's probably why these two are correlated so heavily. Looking at gas prices, slightly up week over week, month over month, down year over year. But $3.50 is the highest price since late May. I just saw today that Biden refilled the SPR to the tune of around 3 million-ish barrels. The Biden administration has said they will continue to empty the SPR should they need to if oil runs out of control. The SPR isn't some monolith where it's just one thing. It's different types of oil. It's different places. You know, it's a complex system. It's not just like, oh, we're going to release some oil now. But if this starts to perk up towards the election, I imagine they're gonna pull any lever they can to try to give Biden the advantage come November. Looking at liquidity and reverse repos, into the end of the quarter, we had a massive jump in money sitting in the reverse repo. We tend to see this end of quarter for regulatory reasons. Some call it window dressing. So that has come back down. But because of this spike, we did see a spike down in US liquidity. Remember, money sitting in reverse repo is money that is not in the ecosystem. So we have US liquidity up pretty significantly from the lows of end of quarter. We've got global liquidity still trending down, and we've got BTC trying to push up here and hold these highs somehow. But I don't think we're really going to see that much more out of the reverse repo. This feels like the potential floor. But from a liquidity perspective, we'll take anything we can get. So if this continues to trend downward below 400, below 300, that I'm sure is also something the Fed is monitoring on their interest rate matrix. Looking at the dollar, it's up a little bit from the lows of Sunday. It's pretty simple. We're still in a mega massive range. Anything below this diagonal support should be bullish for BTC. Anything above 107 should be catastrophic for BTC. And anything below 101 should mean that we are well in the six figures on BTC. So again, if you're pricing in a Trump win versus a Biden win come November, and Trump says he wants to devalue the dollar, well, that may happen. Market hasn't figured that out yet. We're still pretty strong on the DXY, but it's something to think about in the second half of the year. For the S&P, we still have a cup and handle target on the high side here. The cloud TK lines have started to separate. I think the most likely outcome here is we see sideways chop for a minute, at least probably until next week when allocators come back from vacation. I don't think there's a pressing trade on the indices here, on the S&P, on the Qs, on the Qs. The Qs, there's maybe an M double top. Again, you've got the cup and handle, low time frame stuff. We do have seasonality on our side. July here is pretty much a moonshot, Christmas in July, as they call it. And I think what I can see here is a pop on the second week of July. So it's certainly a consideration. We also have two of the best weeks of S&P returns since 1928 in July. So it's hard to think that we're going to see, if we see crazy moves higher on the S&P, what does that do to BTC? What does that do to ETH? Do we get a move higher, a pop higher, and then a mean reversion immediately after? It doesn't feel like the market wants to move higher just yet. And especially on the Qs, on the tech stocks, collectively, most of them just seem content with where they are. So I don't really see a great trade or setup on either of those indices. And really probably what's more important for us is how does Bitcoin look against the SPY, the Qs? Are we gaining or losing ground? And then are we trending against either of those indices? I suspect if we start trending, if we are above, let's say, the 30-day moving average, then we may start to attract flows. If we're out of this channel, we may also start to attract flows, much like we attracted flows in February. Is this the tail wagging the dog? I don't know. Are flows bringing more flows, right? You can sort of rationalize this in all sorts of ways, but I would think if I'm an allocator, I've got something like this on some screen saying, okay, what is this thing? Why is it moving up? Can I access this? Even in Q4, we were consistently outperforming on the BTC side into the ETFs. So this is definitely one of the most important things to watch around the expectation of flows. So we're not quite there yet, but we are back in the range at the very least. NVIDIA, I've got some bad news for the NVIDIA folks. To me, this looks like a low time frame head and shoulders. It doesn't have to break down, but it does have to either time out where it just chops around or break these wicks, which are basically like 128. Clearly the move higher has been the play for the past several months. At this point up here, it certainly looks stretched. It looks stretched relative to everybody else. And the other test that everybody's thinking is, okay, if NVIDIA breaks down, does that bring the entire market with it? Or is this people rotating out of NVIDIA into everything else, right? Into anything, into BTC, into IBIT, into non-tech? Is this just people taking profit, right? Daily Kijun's at 108. This head and shoulders would measure roughly to 100. There's a gap around 100. The 200-day moving average probably moves up to around 100. So I guess this isn't the 200-day. It's the 200 period moving average on the 4-hour. Anyway, there's a story you can build for a way that this breaks down. Sure. I don't think I would short this, but I don't think I would be turbo long either looking at this head and shoulders. Interestingly enough, to me, Costco also high and low time frame head and shoulders, pretty clear. Probably textbook. TK disequilibrium, probably 790 would be the target. So these certainly look toppier than they did going into May. These have been leading. We can look at Walmart. We can look at a few others on the consumer side that are doing quite well, but Costco looks rather toppy to me. Tesla, the inverted head and shoulders continues to play out. We're now above the daily cloud. We're reaching logical resistance based on the yearly pivot. There's also some sort of diagonal that you could draw with resistance somewhere in the 200s. I think they have some inventory or delivery number coming out tomorrow, but this pattern is almost completely played out. So I'd also be careful on that one. And now as we get into like the BTC adjacent stuff or the crypto exposed equities, I guess you could call them, we'll take a look at MSTR, coin, the miners, BITX. In my head, all of these instruments are just 2x BTC. Looking at the NAV premium for MSTR, it's trading as though it's 2x BTC. Most of these are kind of stuck in the range similar to spot BTC. And one way you can analyze these is just say, okay, here are the targets. Like what is the percent move I'm expecting potentially, and then allocate accordingly. You can also look at these directly head to head and say, what is MSTR versus BITX, MSTR versus WGMI, right? You got the miner folks who love trading the miners. You've got the MSTR cult who thinks the NAV premium is going to explode, right? And then you've just got the technicals, which point to basically a 2x from here, right? Assuming we break 1740, I like a 2x from here. It's that simple. I don't know where the premium is going to go, but about a 2x seems right on MSTR. For coin, it's slightly under a 2x from here. I still like how this is positioned. I like the recovery above the pivot, above the cloud. You could argue some sort of triangle here. Certainly looks more bullish than bearish. And if you just measure this with fibs, you get about 400-ish. Into the miners, CleanSpark, this would be over a 2x from here on CleanSpark. Again, you've got diagonals, you've got a mega range, you've got cloud trying to get back on your side, you've got a pitchfork here in the midpoint. So if we do get another round of BTC bullishness for whatever reason, it's certainly early to quote unquote call that because we know where it is in the cloud. This is nothing. It's not telling us anything. Outside of technicals, we know that there's been a lot of selling. Hopefully the market has started to price that in. And hopefully we start to see buyers coming into July, coming into Q3, whatever, right? We'll take anything that isn't just continuous selling, but technicals are not supportive of bullish continuation just yet. But assuming we do get that, this measures to high 80s, low 90s. And that would very likely pull all of the crypto adjacent stuff with it. So it seems pretty fair to me to expect the 2x instruments acting accordingly. So CleanSpark, anything above 40 would be a gift, would make sense. Cypher, from here, Cypher would be a 3x. No guarantee on any of this, obviously, but just looking at the technicals, this has not broken out yet. And this isn't even looking at hash rate or AI, whatever, right? I don't really care about that stuff. It's all important. I just assume that the mining companies will be smart enough to see the other companies with AI deals and say, oh, we should probably look for that, or we should get exposed to that. But the technicals on Cypher look good. Technicals on Iron still look fine. Plenty of upside there. 2x plus potentially, depending on how you want to measure this. I'm measuring this as the old inverted head and shoulders target. There's plenty of room higher. So a lot of these miners, Wolf's another one, plenty of room higher. I think on Wolf, that would be a 3x plus potentially. But a lot of these miners look great still. And then the other miners that I'm not going to talk about, I'm not going to mention, are just ranging. You know, they've been ranging for a long time. Mara is one that has been ranging for a long time, but is starting to break out now. It's out of the weekly cloud. The old inverted head and shoulders target points to, what is this, maybe a 5x? You know, I think that'd be really crazy to see. I don't think it'd be impossible. I don't really like them as a miner. I prefer the other miners over Mara. I think they're inefficient. I don't like that they're mining junk like Caspa, but the technicals aren't not there, right? We're bullish on trend. We've got a target. It's basically a local high retest from 2021, and it's finally starting to gain some steam. Then you could always just say, you know what, forget the individual names. WGMI is fine for me. Okay, you know, this is also basically a 2x from here. Breakout looks good. The Adam and Eve looks good. The cloud looks good. So miners collectively still look great. I would also look at these relative to BTC. So this is WGMI relative to BTC. We're over the halfway point now on this historic trend channel. Definitely a key point to watch. If we reach the top of this, what happens, right? Do we keep going on WGMI strength, on miner strength relative to BTC? Does WGMI pull back? The lows roughly held. You know, it was a rough go there for a little while, but they held. Is this all just AI hype, right? If NVIDIA rolls over, does that roll over the miners? Or does BTC strength pull up the miners, right? These are all just things to think about and consider, because you've also got stuff like BITX where you could say, you know what, I'm bullish enough on BTC. I would rather just keep it simple, focus on something 2x leverage. We're not quite above the 4-hour cloud yet. We're actually pretty far down. There's really no trend evidence to buy this here yet, but I would be watching something like 40. I'm in from, I don't even know where at this point, higher than this. Let's just say that, higher than this. But if you're bullish Q3, Q4, towards the end of Q3 at least, is this a product worth getting exposed to? Something to think about. BITX versus BTC spot is also not favorable for BITX. Again, something just to watch, because when the beta starts to take off, it tends to do very well. You could argue, is this some sort of falling wedge channel thing? I don't know, right? I don't think there's a lot of evidence to buy BITX here, but if you're bullish BTC, then it's something to consider. There's also this, WGMI against BITX, world first chart, okay? Nobody's put these two together. So I think because of the AI stuff, because of the spot BTC weakness, WGMI has pulled up quite a bit very quickly. So just another ratio to watch and to think about, because we've got all these things, people trading alts for God knows why. Just look, trade the miners. I said this last week. I probably said this the week before. Miners are fairly cheap on an individual share basis. WGMI fairly cheap, and they're basically leverage without using leverage. I'm not trying to sell the miners to people, but look, if you want extra exposure during a bullish period, this is one way to do it in legacy land. I thought this one was interesting too. CleanSpark against CleanSpark against BITX. So this looks like, to me, based on technicals, that CleanSpark is favored here. You've got, I don't know, ascending triangle, inverted head and shoulders, whatever. You've got the cloud on your side favoring CleanSpark over BITX. Historically, I've shied away from the miners, but just plain technicals are on CleanSpark's side over here relative to BITX. So is this the top of the channel? I don't know. We'll see. But certainly looks very favorable for CleanSpark at the moment. Cypher versus BITX, again, looking rather strong in the moment. Is this AI taking off? Is this just spot weakness, right? We will see. But I think these are all fun things to watch. Lastly, I just thought I'd mention XLE because, if the oil stuff takes off, if the reinflation trades take off, XLE is one way to get exposed to the energy trade. The trend technicals still look pretty good for XLE on high time frames, but we do not want this breaking out. In fact, we want this breaking down, because if this breaks up, that likely means that inflation has come back in a big way. I just don't see how we can see the XLE strength with Truflation where it is, with OPEC cutting. There's just so much supply. And if there is a recession, let's say, a real deal recession, global recession, I don't think there would be bullish oil expectations, bullish energy expectations. I don't have a chart for it, but I think it was last week we saw the all-time high in TSA travelers. So there's plenty of people traveling right now. It doesn't feel like a recession to me. It doesn't look like a recession based on the numbers. Depending where you are in the socioeconomic ladder, it can certainly very much feel like a recession, and has felt like a recession for many, many months thanks to inflation. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.